There are several terms as a business owner you should be aware of. However, the confusion starts because you have these terms and these terms. They are totally different words, and yet they're used interchangeably. They mean the same thing. They're synonyms. And then you have these terms and these terms that look the same, and yet they mean totally different things in your business. And as a business owner, you're often not sure what this means versus that, and that versus this, and oh my goodness. In today's video, I'm going to provide you with clarity on the top 10 accounting terms you must know as a business owner. Stay tuned. Hi everyone, I am Octavia Connor, your #1 virtual CFO. I specialize in helping multi-six-figure businesses cross the $1 million mark sooner than they think by providing strategic insight and high-level financial management support. I am also the CEO of Say Yes to Profits, a full-service virtual accounting firm. Now let's say that you sell this beautiful desk sign. It's multicolor and it has a play on the word gold digger. And let's say you sell this beautiful sign for $1,000. This $1,000 is considered your revenue, and it's also known as your sales. And even though you earn $1,000 for providing this service or product to your clients, you actually do not get to keep their entire $1,000 because you have direct costs associated with providing this service or product. Now, some of your direct costs are your labor and your materials. Your direct cost is also known as your cost of goods sold, COGS. And let's say for the purpose of this example, your cost of goods sold equals $200. Now that you know your revenue or your sales and your direct cost or your cost of goods sold, now you must move to the next two important numbers, which are your gross profit and your gross profit margin. And as you can see, these names look similar, but they're two totally different numbers. Your gross profit is when you take your revenue minus your COGS. So your gross profit in this case is $800. Your gross profit margin, however, is when you take your gross profit and you divide it by your revenue. So your gross profit margin is 80%. Now, the key thing I want you to remember is that you want your gross profit margin to be 65% or higher. And I'm going to tell you why when we discuss your next two important terms. So far, you know your revenue, your cost of goods sold, your gross profit, and your gross profit margin. This $800 that you have left over, or this 80%, is actually going to be allocated to your overhead, which is also called your operating expenses. Now, you have very important operating expenses, such as your rent, marketing, utilities, and you definitely can't forget your accountant. And you have additional operating expenses, but we're just going to use these for now. And let's say your total operating expenses equal to $600. So now we are shaking with bacon, and we're down to the reason why you are in business. As a business owner, you solve problems for what? Profit. But profit is also called net income. And as you can see, these two names, they look the same in some ways. They're similar, right? And they actually mean the same thing. In order to determine your net profit, for the purpose of this example, you're going to take your gross profit minus your operating expenses, which is going to give you $200. But let's say for your company, you do not have any cost of goods sold. So in that case, you're going to take your revenue minus your total operating expenses, which is going to be $1,000 minus $800. And your net profit is again going to be $200. So your net profit, meaning for a particular period of time, you earn more money than you spend out. But what if you spend more money than you earned for that particular period of time? That means you actually generated a net loss, which is what you don't want to do. Now that you are aware of your net profit, there's another term that is highly important, which is similar to net profit, known as your net profit margin. And while these two terms look similar, they mean two totally different things. Now we know that your net profit equaled $200 for this example. Your net profit margin is when you take your net profit and you divide it by your revenue. So your net profit margin is 20%. Now, I highly recommend that your net profit margin is 20% or higher. You want to reach for 40% or 60% as a business owner. That means that for the amount of revenue that you've generated in your business, you kept a certain percentage of that money in your company. Now, you know that I say often, as a business owner, it is your responsibility to learn how to earn more money, but also keep more money in your business. And that is where your net profit and your net profit margin will identify if you are achieving that goal. Now is your turn. Do you have any questions or comments for me? Be sure to leave them below. Also, share this video on your social media outlets. And don't forget to subscribe to our YouTube channel. This has been your #1 virtual CFO, Octavia Connor. And when I say yes, you will say to profits. Say yes to profits. Say yes to profits. Thank you so much for watching this video. I'll be back again next week. Toodoo!